Hello students, in present video I am going to explain about problem 4 from accounting for not-for-profit organizations. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about this topic. This question is available in the description box. Previous lectures, first 3 lectures, videos links are also available in the description box. Let us see the question first. Kamareddy Youth Club gives you their receipts and payments account and other information and requests you to prepare their income and expenditure account for the year ended 31st March 2019. This is receipts and payments account. Receipts and payments account for the year ended 31st March 2019. Receipts and payments account is divided into 2 sides, debit side and credit side. Debit side we have receipts and credit side payments. Under receipts, 2 balance 22,800 rupees, 2 subscriptions 70,000, 2 donations received for mineral water 80,000, 2 sale of old furniture 42,000, 2 interest on investments 10,200. Payment side, by salaries 20,000, by fixed deposit 1 lakh, by purchase of furniture 35,000, by purchase of share 20,000, by stationery and printing 20,000, by general expenses 6,000, by balance carried down 24,000 rupees. 2 sides totals 2,25,000 rupees. Additional information. First point, outstanding subscriptions on 31st March 2019, 1,500 rupees. Second point, subscriptions received in advance on 31st March 2019, 500 rupees. Third, value of old furniture sold is 45,000 rupees. Let us prepare income and expenditure account for this problem. Before going to solve the problem, let us know some important points about income and expenditure account. Income and expenditure account resembles profit and loss account. In case of for-profit organizations, final accounts contains 3 things now: trading account, profit and loss account, and balance sheet. In case of not-for-profit organizations, in their final accounts we prepare receipts and payments account, income and expenditure account, and balance sheet. Income and expenditure account of not-for-profit organizations and profit and loss account of for-profit organizations. Both are almost same. Observe the name of this account, income and expenditure account. Means in this account we are going to show incomes and expenses of not-for-profit organizations. Incomes and expenses both come under nominal accounts now. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. Therefore, while preparing this account, we follow nominal account rule. As per that rule, expenses and losses of this firm we show on debit side, incomes and gains of this firm we show on credit side. Once you recollect first 3 lectures videos. In first 3 lectures, we learned about receipts and payments account. This is the format of receipts and payments account now. Debit side we show receipts, credit side we show payments. Here credit side we are writing payment, and in income and expenditure account debit side we are showing expenses. So what is the difference between payment and expenditure? Let us see. Current year is 2018-19 now. So in current year, we paid salaries 10,000 rupees and salary outstanding is 2,000 rupees. So how much cash outflow you can see here? We paid 10,000 rupees salary. So 10,000 cash is going from the firm. This 10,000 is known as payment. In receipts and payments account credit side, by salaries, 10,000 only we should show. We should not show this outstanding salary amount 2,000 rupees in receipts and payments account. Because outstanding salary means what? We have to pay. So cash is not going. Receipts and payments account is prepared on cash basis. Therefore, when cash comes into the firm, when cash goes from firm, only these two we are going to show in receipts and payments account. But income and expenditure account is prepared on accrual basis. So accrual basis means what? Not only paid amount, payable amount also we consider. Similarly, not only received amount, to be received amount also we consider. Therefore, on expenditure side, we show these two amounts. Salary paid 10,000 rupees plus outstanding salary 2,000 rupees. In outer column 12,000 rupees we show. Therefore, payment means what? Really how much cash is going from the firm, that amount. Expenditure means what? Paid amount plus outstanding amount. Both if you consider, then it becomes expenditure. Similarly, what is the difference between income and receipt? In receipts and payments account, we are going to debit all receipts. In income and expenditure account, we have to credit all incomes. Are they same? No. Receipt means, suppose take one example. In current year, commission received 5,000 rupee. Commission to be received 500 rupee are given. How much cash is coming to us? 5,000 rupees. This 5,000 is known as receipt. Income means 5,000 rupees commission received plus commission to be received 500 rupees. Total 5,500 is known as income. Therefore, if these two informations are given in the question, while preparing receipts and payments account, only 5,000 rupees commission received amount we should take on receipt side, and while preparing income and expenditure account, commission received in inner column 5,000 rupees plus commission to be received 500 rupees. In outer column we have to show 5,500 rupees. So remember this difference. Receipts and payments account is prepared on cash basis and income and expenditure account is prepared on accrual basis. In receipts and payments account, only cash receipts, cash payments we are going to show. But in income and expenditure account, not only received amount, income to be received also we show. Similarly, not only expenditure paid, expenditure outstanding also we show. Next point is, receipts are of two types. Capital receipts, revenue receipts. Capital receipt means what? Non-recurring receipt. Means it doesn't come regularly. Rare receipt. For example, this organization has taken bank loan. It is a receipt because from the bank cash is coming into the firm. Are they going to take bank loans regularly? No. So it is one rare receipt. Otherwise, this organization received a legacy amount. Legacy means what? Through a will of a person, after his death, if any amount comes to us, then that amount is known as legacy. So legacy is one capital income because regularly it is not going to come. Suppose they have one fixed asset, furniture. Furniture is totally damaged. They sold this damaged asset. They got 5,000 rupees. So this is receipt because cash is coming into the firm. Do they sell the furnitures regularly? No. This is also one rare receipt. So all non-recurring receipts are capital receipts. Revenue receipt means what? Recurring receipt. Means regularly that amount comes to us. For example, take subscriptions. So in not-for-profit organizations, members will be there. So these members, to continue their membership, on periodical basis, they pay subscription amounts to NTC. For NTC, this receipt is a regular receipt. So subscription is one revenue income. Otherwise, they lent their premises to somebody. So every month they receive rent. This rent received is also one revenue receipt. Now the point is, while preparing receipts and payments account, on receipt side, we show capital receipts, revenue receipts both. So we are not going to show any discrimination between capital receipt and revenue receipt. But while preparing income and expenditure account, only revenue receipts we have to show on income side. We should not show capital receipts in income and expenditure account. Then where they appear? Capital receipts we have to show on the liability side of balance sheet. For example, bank loan taken. Cash is coming. It is one receipt. So in receipts and payments account, under receipt side, bank loan amount we show. But this bank loan is a non-recurring income now. It is not regular income now. So instead of crediting to income and expenditure account, we have to show that amount under liability side of balance sheet. Bank loan here we have to show. And you know bank loan is a liability. Now come to payments. Payments are also of two types: capital payments, revenue payments. Capital payments means non-recurring payments. For example, this organization purchased furniture. Do they buy furniture regularly? No. It is one rare expenditure. So rarely they buy furniture, rarely money goes from the firm. So it is one rare payment, non-recurring payment. It is known as capital payment. Revenue payment means recurring payments, regular payments. For example, they have taken their building on rental basis and every month they are paying rent on that. So it is a regular payment now. It comes under revenue payment. So remember, capital payment means non-recurring payment. Revenue payment means recurring payment. But only based on this factor, you cannot decide whether one payment is capital or revenue. Other points also we should observe. So second point is, because of a capital payment, our present earnings increase. But because of a revenue payment, present earnings will be maintained. What is the meaning of this? Suppose one firm, say for-profit organization, one company purchased one second-hand machine. So to bring that machine into usage, company spent 10,000 rupees on repairs. So with this repair expenditure, machine comes into usage. By using that machine, company can manufacture the products, company can sell them, and company can earn money. So because of this repair expenditure 10,000, company's present earnings are increasing. Therefore, this repair expenditure comes under capital payment. Suppose company purchased a new machine. Company used it for 10 years. Now machine became older. Slowly machine started giving troubles. So to maintain that machine, regularly company is spending some amount on repairs. This repair expenditure comes under revenue payment because this is recurring in nature, and by spending these regular repairs, company's present earnings will maintain. Present earnings are not going to increase. So machinery can be used with the same capacity. But additional products we cannot manufacture by spending this regular repair expenditure. So remember, second difference is what? Because of a capital payment, present earnings increase. Because of a revenue payment, present earnings will be maintained. Then third one is, because of a capital expenditure, one fixed asset comes into existence. For example, company is constructing one building. So to construct the building, we need one plan. So that plan is made by one engineer and the company paid some amount to him. So because of this expenditure, that building came into existence, one fixed asset came into existence. So the fee paid to engineer is also a part of building cost. Means the fee paid to engineer is also one capital payment. Construction of building, capital payment, because it is a rare expenditure. Not only that, even money paid to that engineer is also one capital expenditure. Similarly, because of an expenditure, if our present expenses decrease, then that expenditure is also one capital expenditure or capital payment. For example, one company has petrol driven machine. Company spent some expenditure and the company converted that machine into diesel driven machine. So comparing to petrol, diesel charges will be less. So because of this conversion expenditure, our present expenses are decreasing. Machine maintenance expenditure is decreasing. Therefore, this conversion expenditure comes under capital expenditure. So while deciding whether one payment is a capital or revenue, we should keep all these points in mind. Now, while preparing receipts and payments account, under payment side, capital payments, revenue payments, both we have to show. But while preparing income and expenditure account, on expenditure side, only revenue payments we have to show. Then what about capital payments? Capital payments appear under asset side of balance sheet. For example, rent paid. Every month we pay rent. So it is a revenue payment. Therefore, in receipts and payments account, on payment side we should show that amount by rent, and in income and expenditure account, on debit side to rent we have to show. Suppose there is a firm purchased one furniture. Furniture purchased. This is also one payment, but it is capital payment. So in receipts and payments account, payment side, once we should write buy furniture amount. Second time, don't show that amount on expenditure side of income and expenditure account because it is capital expenditure. So where it appears? In balance sheet under asset side. Furniture amount we should show here. So remember, payments are of two types: capital payments, revenue payments. In receipts and payments account, both we show on credit side. But in income and expenditure account, only revenue payments we have to show on debit side. Similarly, receipts are of two types: capital receipts, revenue receipts. In receipts and payments account, both we show on debit side. But in income and expenditure account, only revenue receipts we have to show. Next important point is, in receipts and payments account, on receipt side, we show current year receipts, previous year receipts, next year receipts. But in income and expenditure account, on income side, only current year incomes we have to show. With one example, I will explain this point. Take subscriptions. Subscription is one receipt to the firm. It is one income to the firm because members pay that amount to the firm. Cash is coming. Our current year is 2018-19 now. So on 31st March 19, we are preparing final accounts. Means starting date is 1st April 18. So 2018-19 is current year. In current year, 5,000 subscriptions firm has to receive. And assume that in current year, firm received 5,000 subscription amount. 17-18 is previous year. In previous year, firm has to receive 1,000 rupees subscription amount. But firm didn't receive that amount in last year. When that amount came? In current year. Similarly, Next year 1920 subscription income is 2000 rupees. So that amount firm received in current year only. So in current year firm received three subscriptions. One is current year amount, one is previous year amount, third one is next year amount. While preparing receipts and payments account, on receipt side, two subscriptions. We take 1000 rupees, 5000 rupees, 2000 rupees. So total 8000 we show in amount column. Because we don't show discrimination between current year amount, previous year amount and next year amount. But while preparing income and expenditure account, only current year subscription amount 5000 rupees we have to show. By subscriptions 5000 rupees. We should not show last year amount and next year amount in this account. For payments also same rule is applicable. For example, firm paid rent. So firm paid three amounts in current year. One is current year rent. So for 18-19, firm has to pay 900 rupees rent. And the firm paid that 900 rent in current year only. For previous year, rent amount is 800. But firm didn't pay that amount in previous year. When they paid this 800 rupees rent in current year. Similarly, next year rent amount is 1000. So next year rent firm paid in current year only. So in current year firm paid three amounts. In that one is current year expenditure, one is previous year expenditure and third one is next year expenditure. But cash is going in current year. Therefore, in receipts and payments account under payment side, all these three amounts we have to show. So by rent, previous year amount 800 plus current year amount 900 plus next year amount 1000. Total 2700 we have to show in amount column. But while preparing income and expenditure account, only current year rent we have to show on expenditure side. Current year rent is 900 rupees. So to rent 900 only we should show. So these are some important points which you have to keep in mind while preparing this income and expenditure account. So with this information, let us solve the present problem. In question, receipts and payments account is given. Below to that additional information is given. So by taking these two informations, we should prepare this income and expenditure account. First, receipts and payments account debit side we will see. To balance 22,800 rupees. This is known as opening cash balance. Means what? Observe the dates. We are closing the accounts on 31st March 2019. If this is the last date of the year, then starting date of the year is 1/4/2018. So firm is following financial year. And the starting date of the year is 1st April 2018. On that day, in our firm, how much cash balance we have? 22,800 rupees. That amount is known as opening cash balance. Where it appears? In previous year, we prepare balance sheet now. So in that balance sheet, under asset side, it appears. And opening cash balance is not an income, not an expenditure. So you need not to show that amount in income and expenditure account. So ignore that amount. Next, debit side of receipts and payments account. To subscription 70,000 rupees. Subscription means our club members, to continue their membership regularly, they pay subscription amount to the firm. So this is regular income, means revenue receipt. Therefore, credit side it appears. You know, in income and expenditure account, only revenue incomes, revenue expenses we should show now. Subscription is one revenue income or revenue receipt. So it appears on credit side of income and expenditure account. And related with the subscription, some additional information is given. Therefore, subscription amount you have to show in inner column. By subscriptions, additional information. See the first point. Outstanding subscription for 31st March 19, 1500 rupees. So outstanding subscription for 31st March 19 is 1500 rupees. What is the meaning of this? Current year is 1/4/18 to 31st March 19. No, this is current year. So in current year, we should receive more 1500 rupees towards subscription. So outstanding word generally we use for expenses now. Outstanding salary means salary to be paid. But here for income he used outstanding word. So don't think that we have to pay subscription. We have to receive subscription. Subscriptions to be received 1500 rupees. And I told one point to you, income and expenditure account we prepare on accrual basis. So received amount to be received amount, both we have to show in income and expenditure account. That is the difference between income and receipt now. Receipt means actually how much money came to us, but income means money received and money to be received, both we should consider. So as incomes we are showing on credit side, not only received subscriptions, subscription to be received also we should consider. Therefore, this 1500 rupees we should add. How to remember this point? I will tell a simple technique. If any additional information is related with the current year, we should add. If that additional information amount is related with the previous year or next year, we should subtract. If you remember like this, then adjustments will become easy to you. So, outstanding subscription, we don't write that word. Instead of that, we write subscriptions to be received plus to be received 1500 rupees. Total is 71,500. Why I am writing this 71,500 in inner column? Because one more adjustment is given for subscription. Second point, subscriptions received in advance on 31st March 19, 500 rupees. Observe the dates. Current year is 2018-19. So next year is 2019-20. No? So 2019-20 related subscription amount 500 rupees we received in current year only. So this is next year amount. Next year amount we should deduct. Why we are deducting? Because why we are preparing this income and expenditure account? To know the current year surplus or deficit. We want to know whether current year cash balance is sufficient to meet current year expenses or not. To know that, to know the surplus or deficit of current year, only current year incomes, current year expenses we should consider. If you consider next year amounts also, you cannot calculate current year subscription amount. That is why we are excluding next year's subscription. Minus, what to write? Received in advance. Next year amount, now only we are receiving. So the appropriate word is received in advance. Deduct 500 rupees. Then the net amount in outer column, 71,000 rupees. So for current year, subscription income is 71,000 rupees. Next one. Donations received for mineral water 80,000 rupees. Donation means gift received by our members or from general public. So this donation is divided into two types. Specific donation, general donation. Specific donation means what? If a donor gives that donation amount for a specific purpose, it is known as specific donation. For example, we are constructing one building. So donor gave that amount only for construction of building. Then this donation is known as specific donation. because that money we should use only for the construction of building. Suppose donation for prizes means to distribute the prizes to our students. Donors are giving that amount to us. Only for that purpose we should use it. Suppose we are running one charity educational institution and some people donated money for the construction of library. So that amount we should use only for the construction of library, not for other purpose. This type of donation is known as specific donation. General donation. So this is common to us. For example, I am running one orphanage center. Today is your birthday. So you came to my orphanage center and you donated 5,000 rupees to me. So this amount I can use for any purpose. With 5,000 I may purchase books for children or blankets, or for arranging food I may use that amount. So without mentioning the purpose of usage, if donor gives money to us, it is general donation. If donor gives the money for a specific purpose, that amount is known as specific donation. Specific donation is a non-recurring item. Suppose for construction of building we are collecting donations. Once if building is constructed, that donation amount is not going to come. So specific donation is non-recurring in nature, means capital income. So capital incomes we should not show in income and expenditure account. Here we received donations for mineral water. So with that amount, we are going to provide mineral water facility to our members. As amount is received for a specific purpose, it is to be treated as specific donation. Specific donations we should not show in income and expenditure account. It is balance sheet item. It is capital income now. Where we show capital incomes? Under liability side of balance sheet. Next, sale of old furniture. So furniture we sold. When we sell, when furniture is totally damaged, then we sell the furniture. So this is not a regular income, means this is not revenue income. We should not show sale of furniture in income and expenditure account. Then what is the accounting treatment for this? In balance sheet, from concerned asset, we should deduct. But in that sale, if we have any loss or profit, that amount we should show here. In sale, if you get a loss, then debit side we should show that. And if any profit we have, then credit side it appears. We sold the furniture for 42,000 rupees. And come to additional information, third point, value of old furniture sold is 45,000 rupees. So 45,000 is the book value of furniture. Book value means the value of the asset at the time of sale. Cost of the asset minus depreciation, if you deduct, book value comes. So book value of furniture is 45,000. We sold it for 42,000 rupees. So we sold for less. Difference is 3,000 rupees now. So there is a loss of 3,000 rupees in sale of furniture. That loss appears in income and expenditure account. Which side? Income and expenditure account is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. As this is loss, on debit side we should show that. 2. Loss on sale of furniture. How that 3,000 is coming? Book value of furniture 45,000 minus we sold it for 42,000. So there is a loss of 3,000 rupees. Next, interest on investments. We invested some amount in outside securities, maybe government bonds, company debentures. So regularly we get interest on that. So it is one receipt, and as regularly that income comes to us, it is a revenue receipt. So credit side of income and expenditure account it appears. By interest on investments, 10,200 rupees. Now receipt side completed, debit side completed. Come to credit side of receipts and payments account. Credit side of receipts and payments account, he gives payments, no? Payments are of two types: capital payments, revenue payments. Only revenue payments we should consider while preparing income and expenditure account. We said we should show them debit side, expenditure side. While writing those values, even additional information also we should consider. So first one is by salaries. Salary. Generally, the members of our organization work on voluntary basis. But to some people, we may give salary because we take them from outside. So every month we should pay salary to them. Means salary is one revenue expenditure. So debit side we should show that. To salaries. No adjustment is given for this. Therefore, amount directly in outer column. 20,000 rupees. Next, fixed deposit. We deposited our money in bank. So you can deposit in four ways. Maybe by opening one SB account, savings bank account, or current account, fixed deposit account, recurring deposit account. So this firm opened a fixed deposit account with some amount. So cash is going. That is why he has given this amount under payment side. But opening a bank account is not an expenditure. So don't show here where it appears in balance sheet under asset side. Because fixed deposit, we have some amount in bank. It is one asset to us. So under asset side, we should show fixed deposit amount in balance sheet. Next, purchase of furniture 35,000 rupees. So furniture we bought. Furniture is fixed asset. So regularly we are not going to buy fixed assets. So it is a capital payment, not here. Where it appears in balance sheet under asset side. Furniture 35,000 rupees you should show. Next, purchase of shares 20,000 rupees. So we purchased public limited company shares. For us, shares is one asset. So regularly firm doesn't purchase shares. It is one rare payment. Means capital payment. In balance sheet under asset side it appears. Shares 20,000 rupees. Not here. Next, stationery and printing 20,000 rupees. So for our clerical work, regularly we need stationery items. Similarly, we may print some pamphlets, some tickets, some invoice books. So printing and stationery are regular expenses to us. Means revenue payment. It appears on debit side. To stationery and printing 20,000. Next, general expenses 6,000 rupees. It is a common expenditure, regular expenditure. So revenue expenditure, it appears on debit side. To general expenses 6,000 rupees. Last one, balance carried down 24,000 rupees. Observe the receipts and payments account. Debit side he gave two balance. This is opening cash balance. Year starting cash balance. And credit side at the end he is giving by balance carried down. This is closing cash balance. So at the end of the year, firm is left over with 24,000 rupees cash balance. Cash in hand is one asset, no? So in balance sheet under asset side we should show this amount. So cash balance is not an income, not an expenditure. It doesn't appear in income and expenditure account. So remember, while preparing income and expenditure account, opening cash and bank balances, closing cash and bank balances, we should ignore. So receipts and payments account, all amounts we have taken. Once we will observe the additional information, whether all points we covered or not. First one, outstanding subscription, we have considered that amount 1,500 rupees. Second, subscriptions received in advance, that also we have taken. Third, value of furniture sold 45,000. So for calculation of loss, we considered that amount. So all amounts we have taken. So finally, we should calculate surplus or deficit. Procedure is two amounts columns we have now. Observe which side amount column total is more. Credit side amount column total is more. So in rough notes, credit total you should write first. 81,200 minus debit total 49,000 rupees. Difference is 32,200 rupees. What is the meaning of this answer? Credit side we wrote incomes. Debit side we wrote expenses. So income is more than expenditure. Means this amount represents surplus. We should not use profit, loss words here because it is not for profit organizations. If it is a for profit organization, we can use those words. We got profit, we got loss. But here we should not use them. Instead of that, surplus or deficit words we should use. So if income exceeds expenditure, the difference is called surplus. If expenditure exceeds income, then the difference is known as deficit. Now we got surplus. Where we should show that? Where the total is less, that side we should show. So debit total is less, debit side to surplus 32,200 rupees. Then two sides put the totals. Two sides total is 81,200 rupees. This surplus amount we should take in balance sheet. Under liability side to capital fund we should add surplus. If deficit comes from capital fund we should deduct deficit. So which side we should show that deficit? Expenditure will be more than income now. So credit side deficit appears. So this is all about fourth problem from accounting for not for profit organizations lesson. So hope this video is helpful to you. Thank you.